To this class. My name is Shirex. So I'm here again to teach you this particular strategy we call smart money concept. A lot of people has been asking me to produce this video regarding smart money concept. We normally call smart money concept SMC. So know fully well that the full meaning of SMC is smart money concept. It's a strategy and we also call it a concept. So now I want to teach you this particular strategy and make sure you watch this video to the end. It's one of the popular strategy in forex trading that people use, but people still believe that it doesn't work because they don't understand this very well. So in this video, I will tell you everything you need in smart money concept and how to catch a very good trade with this particular concept. So do well to watch this video to the end and make sure you join my channel, subscribe to my channel so that anytime I drop video like this, you can join. Now, when we say SMC strategy, what are we talking about? Now, what we are saying is when we are trying to, I give you this definition that trading in the direction of big institution. Now, what I want you to understand is that you see, let's come back to this chart now. Let's take a look at this chart. What you can see here on your chart, if you are to look at this chart merely to look at this chart as a layman that doesn't even know anything about trading, the only thing that is constant here, forget about the green candle, red candle, but the only thing that is constant, that is necessarily true in this particular chart you can see on your screen is that there is a movement. What do I mean by there is a movement? It means that market is moving from one point to another point. Let me cite an instance. We have a point here, and market move from this level to this price to this level. That is the fact that we can see here. Forgetting about what about smart money now, from this level to this level. And we also have another fact before us that market also move from this level, come down to this level. Those are facts. This is not even about strategy. We cannot also deny the fact that market also move from this price to this price. Do you understand? Now, why am I citing this example? I'm citing this example for you to know that there is a movement in the market. Now, if you now ask me questions, who are the one moving this market? Who decided that as market is coming from this place and stop here? Who are those who decided it? Or is market just moving according to demand and supply of traders? Or are there some people that are moving this market that we don't know about? That is where the idea of type of traders we have comes in. Do you understand? Now, there are two major type of traders in forex trading. We have retail traders. Now, who are retail traders? Retail traders are traders like me and you that are trading according to small lot size. We don't have much capital. So if you are still trading with $100,000, you are still a retail trader. Even if you are trading with $200,000, you are still considered to be a retail trader. So I will type it as retail trader. So, and obviously, majority of us are retail trader. Majority of us are. I want to be sure that majority of people watching this video are retail trader. We even have some of us that are even trading with $100. So we are retail trader. Our money does not have influence in this particular market. Your $1,000, your $100,000 cannot move market from this price to another. So even if you buy, your money does not even influence this movement. If you buy market with $1,000, it doesn't have influence in this particular, which means you as a retail trader, you don't really decide the movement of this trade, of this forex market. Now, who are the one deciding that this market should move from this point to this point, from this point to this point? These are the people we call institutional trader. Call this institutional. Sorry. Let me come back again. We call them institutional. We call them institutional traders. Now, who are the institutional traders? Institutional traders are traders that have access to big capital. When we are talking about big capital, we are talking about something like they have access to like millions of dollars. They are trading with at least $1 million, $20 million, $100 million, and so on. So those are institutional traders, which means if we have a trader, for markets to move from this price to this price, there are huge billions or millions of money that was invested that makes this market to move from this level to this level. For market to drop from this level to this level, there are billions, there are millions of sold. There are millions of sellers that sold from here, not just $100,000 move this market. Now, who are the institutional traders? Institutional traders are institutions like banks, because those are the people that really have access to the money, like banks. So banks ask a lot of they have a lot of investment, they have a lot of access to bunks of money. We are talking about billionaires in dollars. There are billionaires that are also invested in trading as well. We're talking about billionaires in dollars. We call them big whales. Who are also we have hedge funds and so on and so on and so forth. Hedge funds, those are people that have that have money that wants to invest in market. So those are the people that can move this market. Now, that is what then lead us to smart money concept. Now that we know that we are not we our own money as a retail trader does not move this particular market, which means we are not involved in the decision making of this forex market. Then if you are not involved and we are only coming here to buy and make profit, and we sell and make profit as well. Now, which means if you really want to know the direction to which market is going to go, you have to follow the institutional trader. So your job as an SMC trader is to be able to figure out when institutional traders are taking their trade. You want to know the particular points to which institutional trader enters the market. So that is the area to which you want to enter to, because you know that if markets come to that level, market is going to move. And in the movement of market, that is where you make your money from. So that is what we call smart money concept. We call it SMC. So let me write it out so that for those of you who don't even know about it at all, smart money concept. So these institutions are the one we call smart money. People that has the huge capital, we call them smart money. That's why we call them smart money concept, which is SMC strategy. Now, I know that it will be a question that will be running in your mind. So that's why I give you this definition of trading in the direction of big institution. Now, if you had to ask, how do we now know where these big institutions are placing their trade so that I can follow them? Now, this is where the strategy comes from. So now, if you want to know where the big institutions are taking their trade, these are the 4 things that you need. You need these 4 criteria. Number 1, before a smart money concept strategy must be valid. For you to identify a valid SMC, there must be a break of structure. That is the first thing you look at for that. This particular level, does it break structure? Number 1. Number 2, you must have fair value gap. Fair value gap must be present. This particular level that breaks structure, does it comes with fair value gap? It's important. Then there must be liquidity, which means that level that comes, it must comes with liquidity. It must make sure that that level was able to sweep liquidity. And after the sweep of liquidity, then you mark the last candle as your order block. So that order block is where you are taking your entry. Now let's come here to look at this setup here. Now you will see that market is on a buy trend. Market started from here, we buy, we have a pullback, right? Now all of a sudden, all of a sudden when market got to this place, this market, we have buyers that bought market from here, they buy it to the upside, which means this market was able to break structure here, which means there are billions and millions of dollars that was invested here that makes market to break this structure. Now, we are not making this level a significant level because it just breaks any structure. There is a break of structure everywhere. But the reason why we make this particular level as a level of concern is because this is not just a break of structure. That break of structure also comes with fair value gap. Fair value gap is the gap between three consecutive candles. I'm going to show you an example. Look at this place now. Look at this place. Look at this candle. We have a bullish candle, and this bullish candle. The reason why we call it fair value gap is because this gap that was left over, for those of you who don't know anything about fair value gap, the gap from this first candle to this third candle, that's what we normally call fair value gap. Look at this gap here. The gap between this first candle and the third candle, that's what we normally call fair value gap. That's why I give you the definition that fair value gap is a gap between three consecutive candles. We also have a fair value gap here. If you look at it closer, look at these candles, look at this candle, look at that. So we also have a gap here. We also call it an imbalance. You can call it an imbalance to say this is fair value gap. So which means when you are trying to consider your order block, fair value gap must be here. Because that fair value gap is like a pressure that is showing you that smart money, there is a lot of money that was invested there that caused that pressure. You just see that buy. Look at something like this. Market was just buying. Sellers are not even given opportunities to participate in that level. So that fair value gap that now breaks structure, we have gotten our second criteria. Now, the third criteria is liquidity. That is, that level must break liquidity. For those of you that might be asking, okay, you might ask this question that, okay, we also have another break of structure. Yes, other block can, what's it called? Smart money concept can give you series of break of structure. You can have one, you can have more. But as much as market is still moving, you just have to come here and mark your order block here. Now, it must sweep liquidity. Some people might ask me that what is the meaning of liquidity? I'm still going to drop another video regarding liquidity so that you can have enough knowledge about liquidity. But for those of us who already know what liquidity is, you should know that for you to say that a smart money is valid, your smart money strategy is valid, it must sweep liquidity. Liquidity means stop losses of people. How do I mean? When markets go to this place, there are buyers that also buy market from here to the upside, right? They bought market from here. Sometimes they might not even break structure here, but it might break structure. It doesn't matter. So now people that bought market from here to this place, they are putting their stop losses at the below of this level. That's why we call it liquidity. They put their stop losses here. I'm just trying to show you the short definition of liquidity. People bought market from here to here, so they are putting their stop losses here. There are still buyers here. Now, when markets now come from this level, when markets now come down, reverse back, and take out their stop losses, that is when we say that market has taken out liquidity. Liquidity means stop losses. Market has taken out these people here. Because these people that are here, they thought that market is in an uptrend. So they thought that if markets get to this level, they should be buying. But you as a smart money concept trader, you are not taking early buy from this place because you know that market is still going to come down to this level where smart money are sitting. So you are not taking your entry here, you are coming to this other block. Now, when you now confirm after confirming your liquidity, wait a bit. Now, after confirming that, market has taken out your liquidity, then you are now going to mark your order block. Let me delete it and mark it again. Now, how do you know your order block? Your order block is the last candle. It can be a bullish candle or bearish candle. The last candle before the fair value gap here is going to be your order block. Let me come again. Order block is the last candle before fair value gap. Which means in this situation now, let's say I want to mark this place now. If I want to mark another block here, I'm not saying this is a valid smart money. I'm just using this one as an example before we go to the recharts to show you. Now, if I want to mark order block here now, look at it that there is a fair value gap here, right? So this last candle before this fair value gap is going to be my order block. We know that there is a small candle here. This small candle before this fair value gap is normally going to be order block. This is the same thing I'm saying here, that order block is the last candle before fair value gap. So it can be a bullish candle or bearish candle or any candle. Do you understand? So now when you now allow markets to come to your order block, because you know that this is where smart money, this is where they buy their market. So your belief is that if markets come to that price again, market is still going to buy. So before markets now get to that level, you must have set a buy order here. You must have set a buy order here, believing that if market should come, you are going to make the below of this place your stop loss, and you are going to target somewhere around this place as your take profits and the next swinger. So your belief is that if markets come back to this level, so this is where you're going to take your entry. Market is going to buy because there is a lot of money here. Market is going to buy to the upside. Do you understand? So that is how that works. Now let's now go to the real chart so that I can show you some live example here. Let me delete all this. Now look at what we have here on the charts. Now we already know that market has been buying to the upside. Now you see that smart money concepts are here. What is the first criteria I choose out is this fair value gap. I realize that there is a pressure, which is this fair value gap. You see this gap? There is a pressure between these three candles. So that is the first criteria. Remember the one we are doing. So we have our FEG here. That's how you name, that's why you FEG. That's why you label your chart. Always label your chart. We have our FEG somewhere around this place, right? Now the next thing we are looking for is, does that level break structure? So we also have a break of structure here. This is gold. I'm using gold. You see that market take out this structure. So you label it that you have a break of structure here. I hope you guys are learning something. What other things are you looking for? People's stop losses that is supposed to be taken out, which we call liquidity. So we have liquidity sitting down here. Why do we call this place a liquidity? We call it a liquidity because there are people that are buying from here. So they thought the market is going on an upside. So people that are buying from here, they put their stop losses below this place. This is where they put their stop losses. That's why they are buying. So our belief is that you, as a smart money concept, you believe that market is still will still come back to come and take out their stop loss because you know that there is an order block here, which is where the smart money buy. Now you will expect markets to come and take out liquidity. So liquidity, we normally use dollar to represent liquidity. You can use anything, but this is where we have our liquidity. Now you are now going to mark your order block. I told you that the last candle before fair value gap is what we normally call an order block. Although this place, there are supposed to be a fair value gap here, but from experience, that's why I'm using this particular example for you. Do you understand? Now, this is the last candle before this fair value gap. So that's where you mark as your order block. I actually take this particular trade, and currently now I'm even taking this trade. You can see that this thing is a live chart. I've been holding this position for the past 1 week now. So you mark this place as your order block. Another name for, so the short name for order block is OB, order block. You believe that this is where the smart money are sitting. Now, before market is going to get here, immediately that you cite a liquidity here, you must have put your buy order, because you don't wait till market to get, you are not going to wait for market to get there before you buy, before you put your buy order. So you put your buy order there, you make this place your stop loss, and you are going to target another swing high. You can target more if you like, depending on yours. But let's say for the purpose of this class, let's say you target another swing high as your take profit. So this is like 1:4 now. This is like 1:4. So which means if you put $1,000 here, you will have made $4,000 profit. This is 1:4. So this is smart money concept. Do you understand? This is smart money concept. So these are the things you need. I hope it's clear now. Let's now say that you have done your analysis and market has confirmed the market is still going to keep on buying. You can also find another SMC here. You can also add to your position depending on if you have practiced it well. You see that we have a buy to the upside, and this level also, we have a break of structure here. We have this level that breaks structure. right? We have a fair, so let's say we have a BOS as an, if you are not an experienced trader, you don't need to be hiding multiple positions. But me, I can hide because I already know how this thing works. So we have a fair value gap here, FVG. Yeah, a fair value gap here. We have a liquidity here. There are people that are buying from here that put stop losses here. Sorry. We have liquidity here. We have a liquidity here. We have liquidity here. And I told you that the last candle before fair value gap is going to be your order block. See that this candle is the last candle before fair value gap. Then you mark this level as your order block. See it here as the order block. So you see that when market touch this overall, market has been rejecting this place because of this order block. So you then set your buy order here. Remember that this is a strategy. That doesn't mean that market must come to your direction every time. It's not that, oh, it is a must. You can target this place as another. Let's say we target here. So these are like one ratio. This is like 1:5 or 6. So that's how. So you were expecting markets to come as market trigger this order block. You're expecting market to buy to the upside. So that's how it works. So for those of you who have been wondering how smart money concepts work, so this is how we take our trade in smart money. I hope you are able to enjoy this class to this level. So if you know you have learned a lot, please make sure you subscribe to my channel and follow me in all other social media platforms as well. Subscribe and like this video so that YouTube can recommend this video to other people as well. Like this video, comments, just give kudos in your comments if you enjoy it. And if you have any question, put your comment. Please put your question in the link in my bio. So if you also want to follow me in other social channel, I'm going to put the link to my other social channel under this under the description below, and so that you can follow me. So there you'll be able to see my other short content, about all these things as well. So thank you for joining, and I'm going to see you in the next class. Bye for now.